I just finished reading one of the most influential investing books ever written, and honestly, it completely changed how I think about money. Benjamin Graham's The Intelligent Investor isn't just a book, it's a philosophy that's as relevant today as it was when it was first published in 1949. Let me tell you why this book has stood the test of time. Benjamin Graham, who's often called the father of value investing, wrote The Intelligent Investor as a guide for everyday people who want to build wealth through smart, patient investing. What really struck me was how Graham distinguishes between investing and speculation. He's not interested in get-rich-quick schemes or hot stock tips. Instead, he advocates for what he calls defensive investing, a disciplined, research-based approach that protects you from major losses while delivering solid returns over time. One thing I loved about this book is Graham's concept of Mr. Market, this fictional character who represents the stock market's mood swings. Graham explains that Mr. Market shows up at your door every day, offering to buy or sell stocks at different prices, sometimes wildly optimistic, sometimes deeply pessimistic. The key insight? You don't have to accept his offers. You can wait for the right price, and that patience is what separates intelligent investors from impulsive speculators. This metaphor really helped me understand that market volatility isn't something to fear. It's an opportunity if you know how to use it. The heart of Graham's philosophy is value investing, buying stocks that are trading below their intrinsic value. He teaches you how to analyze a company's fundamentals, its earnings, assets, debt levels, and dividend history, to determine what it's really worth. Then, you wait for the market to offer you that stock at a discount. Graham calls this the margin of safety, and it's probably the most important concept in the entire book. By only buying stocks when they're significantly undervalued, you protect yourself from downside risk while positioning yourself for substantial gains when the market eventually recognizes the company's true worth. What fascinated me most was how Graham breaks down investors into two types: defensive and enterprising. Defensive investors want to minimize effort and risk. They're happy with steady, reliable returns through diversified portfolios of bonds and high-quality stocks. Enterprising investors, on the other hand, are willing to put in the work to research undervalued opportunities and potentially earn higher returns. Graham doesn't say one approach is better than the other. He just emphasizes that you need to be honest with yourself about how much time and expertise you can realistically commit. I also appreciated Graham's warnings about common investor mistakes. He talks about how emotions, fear, and greed can destroy your portfolio if you let them. He urges readers to ignore market noise, avoid following the crowd, and never invest money they can't afford to lose. Graham even includes chapters on how to evaluate investment funds and when it makes sense to seek professional advice, which I found incredibly practical. The book is dense and technical at times, I'll admit, especially when Graham dives into financial statements and balance sheets. But that's also what makes it so valuable. This isn't some fluffy motivational book. It's a serious manual for serious investors. And the best part? The principles Graham outlines have been proven by some of the most successful investors in history, including his most famous student, Warren Buffett, who's called this book by far the best book on investing ever written. So, how could The Intelligent Investor change your everyday life or goals? For me, it fundamentally shifted my relationship with money and investing. Before reading Benjamin Graham, I saw the stock market as this chaotic, unpredictable casino. Now I understand it as a place where patient, disciplined analysis can lead to real wealth building over time. The book taught me to stop reacting emotionally to market swings and start thinking like a business owner. When you buy a stock, you're buying a piece of a real company, and Graham shows you how to evaluate whether that company is worth owning at its current price. This mindset has made me more confident in my investment decisions and less likely to panic when markets get turbulent. But beyond investing, The principles in this book apply to so many areas of life. The idea of seeking a margin of safety, building in a buffer against things going wrong, is something I now apply to career decisions, major purchases, even relationships. Graham's emphasis on independent thinking and not following the crowd has made me more skeptical of hype and trends in general. If you're serious about building long-term wealth and want to approach investing with intelligence rather than emotion, this book is absolutely essential. It requires effort to get through, but the payoff is a framework that can guide your financial decisions for the rest of your life. If you found this summary helpful and want more book breakdowns like this, make sure to hit that like button and subscribe to the channel. I'm breaking down the most influential books on investing, business, and personal development, so you don't want to miss out. Drop a comment below and let me know what book you'd like me to cover next. Thanks for watching, and I'll see you in the next one.